Everybody's watching this dip, but smart traders are watching something else. Okay, by the end of this video, you will know exactly where to buy Tesla and where it is not safe to buy Tesla. Hey, I'm Dennis Wilborn, the AutoPilot trader, and Tesla has just basically paid off for us big time throughout the year. And what I do is I help part-time traders find where to trade a stock and then write it, take the profit, and get out. After 30 years of trading every market cycle, living through the crash of 2000, 2008, I've learned not to fall for the first dip like we see here on Tesla, and exactly how to tell whether the price action is real or bait. So right now, prices are in what I call the fake out zone. This is what I call the fake out zone we see right here. It's where traders think there's value and it looks like a great place to jump into the trade. However, it's just weakness. And so I can remember back here in 2023 when prices started to fall on Tesla, looking at this weekly chart. And I had a lot of friends trying to buy, and they were buying Tesla at 250, and higher. And I said, guys, wait, it's going to drop some more. And that's exactly what happened. It dropped down. I'd picked a price about $150 to get in, and people were just laughing at me, saying, oh, it's never going to get that low. Ha, ha, ha. And the fact of the matter is I was watching my system, watching my indicators, watching the technical analysis and the special things I put together, and it pulled back to within $15 of the low I had expected. But here's what really interests me is what happens if 216, 217 doesn't hold? Where price action, likely to go? Well, let's grab the Fibonacci's and go from this high here, or from this low here, up to that last high. So let's go ahead and click that in. And note that, of course, that's 100% return back down to the 216, 217 level. But where do the other Fibonacci's line up? Let's switch over to the weekly chart. And as I drop down, we see that the 1272 drop would put us down to 184, right in line with where it bounced previously. So a zone of support. What about the 1648? Well, that's just down here, really darn close to that 12-month low at 138. So what I'm looking at right now is for price actions to potentially, if it starts breaking these Fibonacci's, then I believe, and the news on Tesla and the fundamentals on Tesla doesn't shape up, I would say that we are looking at a potential pullback to the 180, approximately 184 level, 183.37, and then that 138.80 comes into play. And then I'm not going to talk about what could happen if it drops down below that. But as you can see from over here, a couple of years ago, I called the 100 or 102 level. That is dependent on, it just all depends. It depends on what's shaping up. But it does look very interesting where if Tesla really starts to break apart, 101 is the stretch downside target, but I'd say that we're typically looking at somewhere between that 180 and the 138. So that's my downside target on Tesla. We'll have to see what happens, right? If I take a look at the other clues that are here, clearly we've broken below the moving averages. The other thing that has happened here that gives me a reason to pause is my momentum indicator, which is TSI, has also rolled over. And the last time it rolled over was we were above the 42 line. Now we're breaking down. We break that zero support line on the TSI, and this accelerates to the downside. That's what can provide the impetus or the momentum to break and crack through what look to be strong levels of support. We'll see if there's strong levels of support or if the hot knife slices through them. Are you watching Tesla right now? If you are, or maybe you're in Tesla, drop the price where you're either going to exit or you're going to get into Tesla over the next few weeks or months. Hey, if you want to learn more about the exact four setups that I utilize and develop for the autopilot trading service, grab a copy of my book, Trade Your Way to Freedom. I basically show exactly how I do my setups and my triggers. You can't go wrong. Ebook or print, link in the description.